Our next guest made a lot of headlines yesterday with his call for year-end targets and the next couple of years. Goldman Sachs chief U.S. equity strategist David Kostin is with us to kick off the hour. Good morning, David. Good to see you.
Nice to see you, Carl. Thanks for having me.
Really an epic note that you wrote, and it got so much attention, not just for your targets, but for the narrative that the economy will normalize, that the vaccine is a game changer, that yields will rise, but not dramatically. It feels like it's almost too perfect.
Well, we certainly hope the forecast will be coming true. As you indicated, looking for the S&P 500 to climb towards 4,300 next year. And you're right, the vaccine, in our view, is extremely important development. Frankly, it's more important for the normalization of the economy and the outlook for our earnings and profits than the election. It's important, it's essential, it's a medical crisis, a public health situation that disrupted society and economies and killed so many people. But ultimately, it needs to be a medical solution. And it does seem, as you heard earlier this week, that there may be a light at the end of the tunnel. And so what we're thinking about in terms of the forecast, that leads us to earnings growth next year, roughly 30%. Again, you're coming off of a pandemic depressed levels that are down 20% this year in terms of earnings. Next year, they'll be rising close to 30%, and then looking into 2022 as well. So that is the forecast. But Carl, what's most important, it's our view, but it's also relative to consensus. And where do we think that consensus is going to be going? Because ultimately, portfolio managers and investors, they'll price in consensus. And so our view is about 13% higher than the other, if you will, strategists on the street. And it's about 5% higher than the aggregation accumulation of all the analyst forecasts. So why do we have this view? Well, part of it is the virus, the vaccine to that, which allows the economy to grow more rapidly. And also the opportunity set inside of the market is where are there opportunities? And it's really about the investment for growth. Rates are extremely low, interest rates extremely low. The market, investors are paying for longer duration cash flows. But very interestingly, there's a lot of companies that have not been investing in this vaccine led recession. And so those opportunities, companies that are leaning into making those investments in 2021, we think those are a big area of focus for us, sort of a strategy. Right. Number one.
Shepard Smith here. Thanks for watching CNBC on YouTube.